It's a show today at 2 o'clock, David Koch. So I've hopefully given him a decent brief. We'll see what happens, see how he goes. I get feedback from Koshy after the show on a regular basis, so boots on the other foot today, be a bit of fun. Hello everyone, welcome. My name is Simon Thompson. I'm the editor of StartupDaily.net and the host of the Startup Daily Show on AusBiz. Great to have you here at FinTech Australia's Intersekt conference for 2022 into our afternoon sessions on our first day. And we're going to talk consumer data right in a minute, the CDR, which leads me to this moment. Now, of course, it's been an important initiative of both the former government and continues under this government, and it's a very exciting space. I've spent a lot of time exploring it, talking to many of the people in this room about it and the possibilities that it opens up. But before we do that, we are going to hear from the Assistant Treasurer and Minister for Financial Services, the Honourable Stephen Jones MP, who has a message for Intersekt. So we'll just roll the Minister on the tape.
Person, but Parliament's sitting this week. I'm actually recording this on the Friday, and we've just come out of a fabulous 2 days with the Jobs and Skills Summit. Really positive conversations with CEOs of major companies, community organisations, unions, and senior government leaders right around the country, all of them with a common purpose to try and put aside differences and focus on the big challenges facing our nation. Obviously, IT and tech skills was high among the list. I wanted to say a few words to you about this thing called consumer data, right? And I know lots of you and lots of your businesses are right into it and have been working away at this for quite some time. But for many people, it's new, but it's going to literally have a dramatic impact on the way we do business and commerce in this country. Now, like any new reform, there's teething problems, and we're working through those, but I don't think that should let any of us let that get in the way of the long-term objectives. And the long-term objective is to ensure that we can transform this thing called data, which a lot of big businesses are already using to their advantage, into something which gives power to consumers. I mean, if the owners of Meta and the owners of Amazon and Apple and Google get it, and they understand that there's a lot of money to be made and a lot of advantage in data and data as a commodity, I think we've got to transform that knowledge and that capacity and put that in the hands of everyday consumers. So we're starting with banking and we're rolling it out to non-bank lending and then throughout the finance sector, and we're going to roll it into energy and we're going to roll it into telecommunications and extend it right around the economy. But the challenge is now on you, the innovators, the app developers, the startups. We want to see you jump into the space and start developing the businesses and the tools which are going to turn this dream into a reality. We can't imagine all of the applications that are going to be developed yet, just as we couldn't imagine when we started using smartphones 10, 20 years ago. We couldn't imagine the plethora of apps that are now available and how it's transformed every aspect of our lives. It's going to be the same with the consumer data, right? We can't yet imagine all the ways it's going to be used, but right now, I can imagine that if banks are using it in a way to ensure they know more about their consumers so they can speed up the process of approving a home loan, then that's got to be in everyone's benefit. And if app developers can get into the game, ensure that they can develop apps which help consumers pitch their needs to a bank or compare their credit needs from one bank to another, or one credit provider to another, or a telecommunications company, or ensure they're getting the best energy deal available, our minds can go anywhere with this. It'll develop into areas around health apps to ensure people are getting better health care, right across the economy, right across every aspect of our lives. I've got lots of faith in your ability and the ability of Australian innovators to turn the thing that we're creating today into a whole new way of doing commerce and a whole new way of doing business into the future. Once again, best of luck for the conference. I wish I could be down there. I know you're going to do great things.
Thank you, Minister Jones. I'm loving the energy he brought to that. He was obviously very, very pumped from the Skill Summit, but also CDR, which brings us to our panel. Heading to an economy-wide rollout of CDR. And to talk about that, we're joined by Alex Scriven from Tree, Scott Farrell from Kingwood Mallison, Claire McFarlane from Intersekt, Peter Crone from ACCC, and our moderator is Tonya Berglund from Equifax. Please put your hands together, welcome them to the stage. Of course, we've had a couple of years of open banking now. It's really starting to have an impact. We're going into, I think, insurance and telecommunications and energy along the way, including the first one in November, I think is our next stage. But to sort all of that out, I'm going to hand over to Tonya. Have a great time, guys. Thanks.
Thank you. We've got the dubious pleasure of being after lunch with everybody's bellies full. So for those of you who don't know me, my name's Tonya Berglund. I work at Equifax Australia and I run their open data and product innovation team. To the left of me, and some of you would know a few of these individuals, we have Peter Crone, who's the Australian Competition and the Commissioner of the Australian Competition and Consumer Division. We've got Scott Farrell, who many of you would know as somewhat of the father of CDR. We've got Claire. Claire McFarlane, works for Intersekt and is a product director there, and Alex Scriven, who is the Chief Operating Officer at Tree. So where to start? Look, my journey in CDR has been quite a few years now, and I'd say I've been through some of the earlier, let's say, troubled road, but also the bright future that we see ahead of us. The reality is now we're looking at the energy sector coming on board in November. Telecommunications has been out for review, and there's been a number of feedback back to the ACCC and Treasury teams on that. And the open data, the open finance sector is now up for consultation. So there's a huge amount of opportunity that we see ahead of us. What I'd like to do, though, is just start some of my questions, and I'm conscious we've got a short amount of time, but ideally just to sort of do a bit of a pulse check on where we're at now. And, you know, I understand there's a number of fintechs in the room, and the use of data, or CDR data, is probably still new to a lot of people. So I'd like to, I'm a Sydney Northern Beaches girl myself, and I love Scott's initial comparison he made earlier on, the metaphor of the beach flags. So I'm curious, Scott, when we look at where you've been from 2017 and moving where we are now to 2022 and into the future, are we looking at a scenario and reflecting back, are we kind of the flags at the beach are a Manly beach where it's long and broad, or are we more an Avalon beach where it's quite short and we're still quite narrow? Where do you feel we're at in terms of a pulse check of CDR?
Yeah, thanks for that. Manly Beach is my local beach, and I'd say that that's a much safer beach than Avalon. So I actually printed those analogies in the second report. I would refer to the other one of the analogies in relation to the progress on CDR. The other one I used was the one about the country road and the highways. If you're building a road network, you cannot judge the impact on both personal convenience and business productivity when you have only connected the first two destinations. For one thing, you can only travel to one place at the moment. And the second thing is, well, maybe you haven't built enough of the road so you can get big trucks onto it. And the analogy here is it is far too early to criticise the CDR for its development or its time in development when it is allowing passengers to travel from one place to another. When it has action initiation, so when we have trucks moving goods along this data highway, then there'll be more productivity, but there'll be even more when you can travel to 2 places, or 3 places, or 4 places, or, as the Minister just said, all of the places. I work with some other governments in some other countries around the world who are putting CDR into place, and even some of those who already have open banking. Those countries, including the European Union and the United Kingdom, do not have a perfect system or a perfect journey to get to where they've been. just like you don't have a perfect journey if you're building a road network. Overall, I'm pretty happy. I may have been the only person 5 years ago who thought, wow, this is a serious job and this is going to take the next 10 years of my life if this works through. And I'm actually really happy that we're on that journey and making it work, because I'm just actually thrilled that the cars can be driven between two places now. And when they're driven, they'll stay on the road and they won't fling off the road like they do in a country road.
I might just throw the rest of the panel here. Alex, maybe you can go next in terms of what you're seeing in terms of use cases, success or otherwise. In terms of the pulse check where you see CDR at the moment, how do you feel?
Yeah, I mean, there's no question it's a road. And I think, the market definitely feels that. But I think what's changed for me is the new access models and making it easier for companies to just realistically say, I can invest in this space for a relatively small amount. I can activate my use case in a sandbox, and I can try it. And that's really important because, it means that you're taking something that was philosophical into reality. From a data set perspective, we're seeing some new activity in the energy sector that I think is really interesting, particularly because I think what's happening in the energy sector is quite it's quite big. It's obviously undergoing a huge change. It's got cost pressures, but having said that, it's still charging on into the CDR. And that data set is really cool. It's metadata. It's being able to see somebody's real-time usage of energy, and not just that historical use at the actual meter, the peaks and troughs of someone's usage. And what that does is it means that that the industry can think of itself as more than just point-of-sale suppliers. It now means that if you understand if someone has a point of high use and a point of low use, you might need a battery, you might need bigger solar systems. And if you can then also grab their financial data, you can also see if they're actually able to afford to borrow to buy those larger investments. So the industry is, I think, coming to terms with the fact that with multiple data sets comes multiple opportunities, and that means you can play in more areas than you otherwise potentially would have.
Yeah, obviously a lot of opportunity. And look, one of the things I've observed in the last couple of years with the consumer data, right, is the amount of flexibility the government has had listening to the industry, and we've seen that with some of the changes to access to the CDR. You started with becoming an ADR and a data holder, but yet it's much broader than that now. Just Peter, maybe to my left here, we had an inquiry into the future state of open banking by Elizabeth Kelly. So I suspect there's been a lot of useful feedback off the back of that review. Where do you think that's going to go in the future? What's the opportunity there?
Yeah, thanks, Tonya. And look, I'll just start out. We just heard from the Minister, and you could all see the great enthusiasm that he has shown, which was actually quite good, because my first comment here was we've had indications that the new government strongly supports the CDR, and that's clearly the case. Under the legislation, there was a requirement that a statutory review of the CDR be undertaken. Elizabeth Kelly has done that. That's now with the government. We're expecting that the government will release a comprehensive response later this year. I've seen the review. I can't speak to the details, but I guess I can make a couple of high-level comments just to share with the audience. I think reflecting the fact that we started from nothing, and the focus has been on building the ecosystem. So we had something like some quite significant, and I dare say frank, input from around 40 participants. I think there's a recognition that the delivery and implementation is complex. But having said that, no doubt in my mind that the foundations are very well laid, and there's a lot of good reasons to be optimistic about the CDR. I think the economy-wide features of it do mean that it's world-leading. Just in terms of, and I'm speculating here in terms of where the government may go on this, I suspect that there's going to be a lot of enthusiasm for action initiation, and also, as I think people in this audience would be aware of, the high-value use cases means a greater focus on the data sets. And so perhaps we may see a shift away partially from sector-based assessment to a bigger focus on the data sets. Related to that is how do you bring the government-held data into the system. Another area which will take some time but great upside potential, that's increasing small business participation in the CDR. And then the other thing which is, I guess, a theme of this whole conference, and we saw it at the previous session, just this alignment and integration with the other government policy initiatives. You know, the privacy review, digital identity, so on and so forth.
Thank you. Claire, can I pass to you and just maybe you could give us a little bit of an overview of iSelect, your journey, and I know that you've got some really exciting things happening in the next sort of 6 to 12 months there. And what I like about when we spoke previously was that there is the use case really coming to fruition in not just the banking sector, but beyond that now. So maybe Claire, can you talk us through that?
Yes, thanks, Tonya. So just to follow the theme, we're sort of early on in our journey, so early on the road, leveraging the capability that's being delivered via CDR. But for those of you who don't know, iSelect is a comparison service, so we compare products and services across a bunch of different verticals, so insurance, utilities, finance. So our customers might come to us for a range of different comparison services to find a better price, typically. So in terms of our specific use case that we're bringing to market, it is in line with the rollout of open energy. So we're looking at an open energy use case launching later this year to sort of offer a comparison service leveraging CDR data to provide our customers with a better price, sort of leveraging real-time data, as Alex touched on, versus sort of the manual input of data, which typically comparison services have required. We then sort of look at the horizons that we're mentioning here around open telco, open finance, so we can offer that sort of whole of household comparison for our customers. But early on and ambitiously delivering on that timeline.
Thanks for that, Claire. And Alex, just to you again, you've probably got a good overview of a lot of the fintechs in the industry. Do you see appetite coming from that energy sector and even just telco, or is it still predominantly with the banking space?
Yeah, I mean, being at Intersekt, we get asked this all the time. We have interest. I think it was fair to say early in the piece that we had interest primarily from the finance side of things, from just making finance easier to acquire, and being able to see somebody's affordability, get access to the affordability information. But I think the industry's matured and actually matured quite quickly, and that's because we are now starting to see quite a big variety of different use cases from this room come forward and see the opportunity of CDR. And I think it's in part because obviously it takes some time to digest what it actually is and to say, oh, well, yeah, I can use that piece of data inside the data set. But I think also with all of the commitment from government and regulators, I think there comes a sense of security that this is the beginning and then this will grow. And I think that's actually really important for all of us in the room to be able to make investments in this space and not just tactical but strategic investments that require people to get pulled off projects and put onto this CDR project. I think it's really important. So yeah, we see use cases across everything from loyalty, payments, the finance segment. The energy sector is really interesting. And there's various use cases that increase the level of engagement of a consumer because they haven't actually been able to see this information before. So if you think about energy bills, they're quite a two-dimensional thing when you get them in the post, right? Like, it's quite exciting to think that you can engage with your actual usage in a way that might be, quite real time. So that just that concept, right? Compared with everything else you can do with everything that's coming down the track on action initiation and all the other industries that we've spoken about, just increases exponentially the amount that you can, the amount of participation from the general market. So I do feel like the market's getting it. There's a reason why there are people in the room. It's because we all get it. I think it's really important that we now focus on how we can get those use cases into market easily, quickly, and that's certainly what we focus on. And I think also partnerships play a huge role in that as well, because not everyone here can invest in everything. So what do we specialise in, and what are other businesses do in the economy?
Yeah. And I think it would be fair to say that volume's still fairly low, and I think there's a number, and this is just my personal opinion, that I think that that the uptake has been slow because we've been dealing with issues of trust. The consent process is somewhat cumbersome, and if you think about it, if you're at that fires the barbecue on the weekend and you're talking to someone about what open data is, I don't think you'll get much of a response as to what that actually is. Now, of course, there's a philosophical question about, do consumers really need to know what that is? Or do we need the publicity campaigns, that go out there talking about it? What's your thoughts? I'm happy to open maybe Scott, or do you think consumers really need to know what the consumer data right is, or do you think it's just an enabler and the people will come when the value propositions are there?
My view is that it is the functions that CDR performs for people which will engage them. There are so many different things in our wonderfully complex economy which produce real benefits, and I have not a clue as to how they work, which is great. I actually don't have a clue how the engine works under the car and the bottom of the car, right? But I know it works, and I know it gets me from A to B on that road I referred to. I get asked this question a lot as to, well, do you want, you use that relatively crazy term, father of CDR. Certainly I do not want anyone to use that term. But do I want anyone to ever say, oh, wow, like this CDR thing's really good? Probably not. In fact, what I come down to is those 4 words on the front cover of both of my CDR reviews are the words that I would love to hear people say. Like, I'm a customer, I got to make different choices, it was super convenient, and actually I'm not scared at all about sharing this data stuff. That would be like triple tick from my point of view, because with all of this stuff, when you're considering CDR, please put it in context of where we were and where we are now. It's not the case that we have a beautiful world where no one shares data, all sharing of data is perfect and nothing ever gets abused. We're in a context, as I've used, we'll go back to your beach analogy, we're all swimming in dangerous surf. So the idea of providing that confidence and providing, wow, this just saved me money, or really importantly for what the Minister said, action initiation is a form of digital inclusion in the sense of it enables people to actually get a benefit out of, a real benefit out of data, even if they do not feel capable of making all those choices and pressing all these buttons as well. So it's a really powerful tool for digital inclusion, which I think is just as critical as financial inclusion in the future, because we are excluding a lot of people from our digital economy. So, yeah, I'll just leave it at that.
Thank you.
Clearly wanted to have a follow-on comment. I mean, for Intersekt, as part of delivering our open energy MVP use case, we're getting continuous customer feedback. So interestingly, I had concerns around the onboarding and consent journey being a barrier to entry for the product adoption. And actually, despite the fact that we went and tested a lot of rounds of that product, customers felt that actually created trust. The wording CDR throughout that journey, that didn't mean much, but sort of giving a product name. So I think it is a behind-the-scenes capability. The customer comes to Intersekt to compare a service. How I do that through a technology enabler is not at the forefront of mind for the consumer, but I think what's critical to any new innovation or initiative is just that continuous customer feedback and engagement with industry delivering the use cases, which is what you hear today. So I think that's really important.
Yeah.
Could I just add, sort of really builds on what Claire was saying, and again, we've heard this at the previous sessions. Everyone knows there's huge cost of living pressures. The Reserve Bank increased interest rates. There's a very large proportion, possibly around half of all fixed rate mortgages are going to be up for renewal in the next 2 years. So that's a huge opportunity in terms of switching, in terms of coming up with a great use case. And I guess the thing here is action initiation. It's not just the comparison, it's actually to take the consumers and be able to switch them with the click of a button.
Thanks. And look, we've only got a couple more minutes, so I've just got one more question. And, I feel like it's a bit of the elephant in the room because having worked at big banks myself and the government as well as and FinTech, I feel that especially when it came to the open banking journey, it was a very high cost regulatory exercise. And now when we're consulting and looking at future sectors, we're finding some of the larger, let's just say the telco providers, providing similar feedback around just the cost of actually implementing a program like this. So some quotes I got from some of the feedback was CDR is likely to be an expensive white elephant for the telecommunications sector. So, there's still a little bit of negativity on the opportunity that CDR affords. And I'm open to anyone's thoughts here on the panel if anyone wants to go first, but I think it's fair to address those concerns and where they come from. And, what would you say in relation to that when you get a large telco saying it's just going to cost me money?
I can start if you like.
I won't point fingers. I'll point fingers if you want.
Whoever's got the microphone closest to them.
Yeah, that's right. Look, there's no doubt there's a cost of compliance with the CDR, right? You can't ignore that. I think from personal experience, there are a number of things that companies can do to ensure that they are well positioned to take advantage from the other side of the coin as a data recipient and to activate their use cases. And I know that we've been speaking about this before, Scott, around the level of, business maturity required to change the mindset from a supply mindset to a consumption mindset. That is, potentially easier to do within a FinTech environment where you're thinking about creating a competitive edge, a competitive difference. But in a large organisation, it's about, the ability to quickly assemble teams to be able to, stimulate innovation inside your business. That's easier said than done when potentially those people have fairly narrow roles and focuses. So I think the earlier some of these businesses can get onto reshaping their business around that challenge, to start thinking about how to consume the data, start thinking about just open-minded thinking about what would be great for a consumer to be able to do inside my business that we potentially haven't thought of before. And I'll just say one more thing. I think what CDR brings is also the ability to reconsider yourself actually as a B2B service if you're actually a B2C service. So you might be providing a service to market and acquiring customers yourself, but in doing that, in consuming CDR and creating a widget of some sort inside your business, that little widget might be really valuable for other businesses in the ecosystem. So you can actually operate as an outsourced service provider, and this is why we have the 80-tree exchange. You can operate as an outsourced service provider and provide that service back through to the rest of the industry. So there are heaps of opportunities. It's just about creating that difference of mindset, in my opinion.
Yeah, this is a question I've lived for the last 5 years, and you can actually, in the parts of my law firm which provide advice on this, and one of my colleagues, Daryl, is in the room, who leads a lot of advice in this area, we can tell the difference between those clients of ours who are in the first stage of grief in this, which is denial, and those who are at the other end who are actually engaging with it. The most important issue here, I think, and I've seen very large organisations transform themselves in this area, is to separate tactics and strategy. And so if you move into a strategic thinking, do you think it's important in the context of our world that there is a clear digital pathway which everyone contributes to? There is no free ride, there is no walled garden, where you can compete on the merits for the interface with your customers? Or do you think it's better to leave it, and then there will be dominance by particular entities from wherever they come from in the world, and that's where your customer interface will be determined? I don't think there are many large organisations that would say that this is not a strategic imperative as to how to help their customers. I don't think many businesses can say it is not the first strategic imperative to help their customers. You don't get to choose the digital world we live in, you just get to choose your response to it. I do realise it's expensive. Lots of stuff in dealing with change is expensive, but this is usually directly aligned with the business models from a strategic perspective of the largest organisations in this country and, quite frankly, the largest organisations overseas who interact with this country.
Thanks, Scott. And I think we've got a couple more minutes. Just a wish list moving into the future. Maybe I'll go one by one. Let's see, Peter, maybe you go first. And what would you like to see in the future for
Thanks.
consumer data right?
Look, I guess my take on it is it's been great to see the ecosystem develop. Ultimately, it's all going to be self-reinforcing, self-fulfilling. I think it's great that we're starting to get more data recipients come in, the representative models. I guess from my perspective, it's really all about the magic of the fintechs coming up with a compelling value proposition. And the more that you get in, the greater the probability you're going to get one of these great ideas that just knocks it out of the park. And then once we get one or two use cases like that, I can just see the whole system just taking up. So I just encourage you all to keep at it and come up with the magic.
Thank you. Scott, what's your wish list for the future?
I think my wish list would be that the different projects which we are, and they're all good, we are engaging with in our digital economy, all fit together in a way that has a plan that people can invest into. And I would say that obviously that includes payments as well as the consumer data right. And I also think it includes some kind of framework for identifying yourself digitally so you can safely interact with that environment as a real person. That's a big wish list. Like, I'm really giving Santa a heck of a job there. But we have to get there one way or another. But to allow you guys to innovate, you've got to have some certainty so you can get the capital to pay for it.
Claire?
So from a comparison service perspective, I mean, I believe CDR is probably one of the biggest disruptors, which will really fundamentally change how that service is offered to the Australian marketplace. But I guess from a wish list perspective, I would hope that, you know, all of us remain focused on how CDR actually delivers value back to everyday Australians. So rather than just looking at as the industry around CDR, it's really staying true to having consumers and customers at the heart of it and making sure we're continuously focused on delivering value back to the country.
Thank you. And Alex?
Yeah, so for me, wish list is really around, the continuality, I guess, of the rollout of data and also action initiation. I think the industry's ready for it. I don't think there's any reluctance from the data recipient side of things to have a go. The one thing I would say from a business perspective is a wish list, and we run into this all the time at Aidatree, is a wish that fintechs could think about their value proposition less than the regulation. So that we do run into some businesses that just get bogged down in, well, how does this work and what role do I play? Am I an outsourced service provider, a trusted advisor, a rep? Do I need a license? So forget it. Just forget all that. Those models are there for you and for you to activate your use case. So I haven't seen a single use case that couldn't be activated because of the new rules that we've got in place. So that's my wish list, just to be a little bit unrestrained around our thinking.
Thanks, Alex. And I have to testify to that, because now jumping into a large organisation at Equifax, it very much feels like, how are we going to do it? But we've got these great ideas on what we want to do. And so going through the second time, me now doing an ADR accreditation, I'm having to convince that everyone, let's focus on the opportunity and that expensive regulatory exercise. It is a cost, there's no doubt about it. But I think that the opportunity and the value proposition that we have, and especially as, interestingly enough, a credit bureau could actually play in that market, is quite groundbreaking. Yeah, so I don't think Equifax is really known for product innovation, but I think in the future there could be some opportunities. So I thank everybody today. I'll hand back. I think we've got our next session coming up very, very soon.
We do, but ladies and gentlemen, please put your hands together for this fantastic panel. Tonna, Peter, Claire, Scott, Alex. Scott, I'm going to call you the Grand High Poobah of CDR from King, Wood and Metaphor. And when it comes to the beach, and I think this is the way you think about it, because one of the problems here in Australia is we tend as businesses to think about product rather than the end user. So as a consequence, we sell the steak and not the sizzle. And CDR, in whatever form, is a really important sizzle. And I'm excited as a consumer as much as I am by the ideas that are coming out of it. So if we're at Avalon Beach, or let's just say, I want to go for a swim. Let's start with the fundamental proposition. I want to go for a swim. An Avalon. Well, with the open data we've got, we can tell you where the sharks are, we know all about the reps, and most importantly, we know your swimming strength. So we can tell you where to go on that beach so you can swim safely and not get into trouble. And I think that's what CDR can do for consumers. So please thank our panel. Yeah, I know everyone's got heaps of questions, but the great thing is everyone's around. We will take another break at 3:30 for afternoon tea. And of course, there's nothing to stop you bailing them up right here and go outside and chat. So help yourself to our panellists today. All right, now let's go to a global first approach to building a fintech with what I think is going to be 3 fantastic accents and maybe more. Our speakers today are Vijay Rao from TransferMate Global Payments, Hayley Fisher from Adyen, and Ruben Lim from Singapore FinTech Association. Moderating this panel is Jonathan Jeffries from Think and Grow. Put your hands together and welcome to the stage. Cheers.
Can everyone hear? There we go. All right, so thanks for coming, everyone. And obviously, some of you have travelled further than others. But perhaps we start with you, Vijay, and just introducing TransferMate Global Payments and your role in the company and what TransferMate does.
Hi, my name is Vijay Rao, and I take care of APAC for TransferMate. So TransferMate is a global payments company, cross-border payments. That's our focus. B2B cross-border, and we've been in Australia for about five years now, and we've got a few hundred customers in Australia, and I look forward to sharing more as we go along.
Hayley.
I'm Hayley Fisher. I'm the Adyen Country Manager for Australia and New Zealand. And Adyen is a global fintech platform, and we help leading businesses process payments across online, in-store, in-app. We were founded in the Netherlands in 2006, and we opened our Australian office in Sydney in 2015.
Lastly, Ruben.
Hi, good afternoon, everyone. My name is Ruben from Singapore FinTech Association. So yes, we do have to travel about a good 8 hours to get here. And what we do is that we are the FinTech Australia equivalent in Singapore, and we have supporting about 800 corporate members and about another 1,600 individual members. And basically what we do is to support our members to succeed, as well as to support Singapore to be a FinTech hub.
Thank you all. So we're here to talk about global first approach, and I think without further ado, we'll crack on. To the guys that were in the tech startups, what does global first mean to you?
Right. So I guess from our own experience, we started in Ireland about 10 years ago, and we grew from Ireland. But the systems that we were working on, cross-border payments, is something that is by its very nature global. So you have to almost from day one think about sending payments to Australia, to Malaysia, to Hong Kong. So we were almost automatically global, and to Singapore, right? So that is the very nature. You sit in we sit in our quiet rooms, but you can hear the whistle of the ships and the roar of the trucks as they load and unload. So it's a vital part of the global economy, and as we have seen, the supply chain problems causes problem not in one country but across the globe. So by its very nature, the business was global. So when you build out the system, we had to think about the entire world, not just one particular country, and certainly take into cognizance all the challenges that we would have across the globe, the AML challenges, dealing with the regulators, etc. Yeah.
We can relate. I think for Adyen, having a global first approach was a get-go from when we founded the company. I think if you know much about payments, the payment landscape is really convoluted. So there's lots of archaic architecture, it's very mismatched, nothing's connected together. So our founders created Adyen and built a single platform which works globally for global merchants. So whether that is adding a new payment method, adding a new country, products, features, it's all developed on the global platform. So when we build it, it works for merchants, whether they're based here, Singapore, or somewhere else. So it's been, the core of our business, and that's been our strategy the whole time.
And Ruben, for you, in developing the fintech ecosystem in Singapore and expanding it globally, what are the sort of tips and common patterns or perhaps gaps that you see in the Singaporean businesses when they're trying to scale global first?
Before I begin, quick show of hands. How many of you actually been to Singapore or know Singapore? Oh, wow! Nice. Right, so if you guys do know, we are actually really, really small. We are pathetically small. We are not even bigger than a lake in some countries, in New Zealand for that matter. So to that question, Singapore companies, whenever they start a business in Singapore, they have to think global. And I think it's really very much the nature of Singapore and the way for the past 50 years our economy has been set up. So maybe just to give you some numbers, don't quote me on that. I mean, it's not entirely 100% accurate. But so in Singapore, right now with us, we have about 800 corporate members, and of that, only about 30 to 40% of these fintech companies are actually originated from Singapore, and they are like Singapore founded, Singapore started. But yet many of them who are in Singapore are actually from other countries, including like Australia, US, Israel, China. So that really makes Singapore very exciting because you really have the best of all these different businesses and different fintech solutions coming into Singapore. And thereafter, which is why all Singapore companies really have that global mindset because you really cannot just depend on Singapore to survive. But what it helps is that if your business case is tested in Singapore and is validated and you get if you're licensed, if you're under the regulatory guidelines and you are licensed, it gives you a very strong testimony. It helps in your valuation. It helps in the way you maneuver the market. So really, I think a lot of people use Singapore as a test bed. And I think on top of that, it's really about you're looking at Southeast Asia as well. I don't like to use ASEAN, but look at Southeast Asia as well. So Southeast Asia is not exactly a simple market to navigate because it would be wrong to assume it's actually one market. It's actually made of 10 different countries with different languages and culture as well, and even 10 different currencies. And we do have different time zone as well. So I think the good thing about Singapore being a global, regional approach is that firstly, people come to Singapore to try their business, to find partnerships, to go into Southeast Asia. Singaporeans are also doing that. And in terms of the problems that we have, sometimes we do need to form more partnership because, I think that applies to all of us for that matter. Many times when you want to go global, we tend to think too much about our background. And you realize that actually when you go to different countries, it's actually very, very different in the way doing business. So even the way doing business in Australia will not be the same as doing in Singapore. So let me just stop there.
Thank you. So on that point, when considering expanding globally, what's the balance that your company's made in terms of trying to create a local culture in the markets that you've been in? And are there any things that are worth bringing up for the audience in terms of how to balance that growth and think about values and cultural differences in expanding your teams?
Yeah, so when we launched in Australia, we based it on our merchant demand. So we had global merchants looking at processing and wanting to process in Australia. So we sent one of our Dutch colleagues to Australia and he opened our office in Sydney. And then we built the team around him. So we started with sales, account management, and then built in support implementation from there. So it was really important to bring the knowledge and the experience of Adyen to Australia, but just as important to localise and hire local experts and have them part of our team. And then you mentioned culture, obviously a huge important thing for Adyen. We have the Adyen formula, and as part of that culture is ensuring that we localise that culture here as well. So making sure that that global culture and mission fits in with Australia. So we did a lot of work to make sure it works here as well.
So it was a combination of the skills that we had, the experience that we had out of Ireland, together with hiring almost Australia. But at the same time, we do have people coming down from Ireland to share their experiences and their knowledge, particularly about how the systems work, which is very unique in the payments industry, particularly the cross-border payments industry.
I will just also add in there, besides sending someone from Amsterdam, it's also really important to have things like exchange programs. So there's so much knowledge from global headquarters in different countries with skills and experience in different countries. So we often bring people over from other countries on exchanges, whether that's just understanding products better or understanding a market such as LATAM. And it works really well. It means that people within your company get to travel, they get to have more experiences, and then they bring that back to their home country as well. So great experience.
Yeah, interesting. Like one of the biggest challenges we've seen in the work we've done over the years is that first onboarding phase. Is there strategies that your global first organisations have adopted in terms of making sure that the staff are embedded correctly in their first few weeks in?
Yeah, I think we have a comprehensive onboarding program. So an employee would join us, they go through an induction program, they go through local onboarding as well. So it would be a joint onboarding between all the different units within Transformate, both locally and out of Ireland.
And we're very aligned, so we have exactly the same. We have a fixed onboarding program where the teams in the Asia Pacific region get together in Singapore for a week of onboarding, and that carries over for the first 3 months and then onwards. So it's just a really nice way to get to know your colleagues in other offices, in other teams, and I think it really helps you to help them to ramp up to be able to make impact on your business.
Totally. So in terms of ramping up, and obviously feel free to answer as well, Ruben, here, what are the nuances or differences you've seen in terms of creating brand presence in those new markets when we've got language barriers and we've got different entry points through different partners that you've seen that have worked well for Singapore as a region?
I guess for a start, it's very important to identify your own product and business. So are you B2B or B2C? And in different contexts, you do need different form of brand and marketing. And I think we heard this kind of stories many, many times before, but more importantly is to always understand the local nuances. Because even the likes of Nike, you're talking about a big global FMCG brand, they still make the same mistakes in not understanding local context well enough. If I recall, there was a sneaker that was made, I think for the Middle East market, and there was some name of the, if I'm not wrong, was Allah, and it was at the bottom of the shoe, and so there was a lot of this cultural misappropriation. So I think it's really, in terms of branding, firstly is identify really, are you a B2B, B2C, who are your target audience? And I think one of the biggest challenges in the B2C space that you identify in today, especially in Singapore and Australia and other parts of the world, is that you're seeing 5 generations of your consumer existing at one time, from your boomer to Gen X, Y, Z, and then Alpha. So and then it's where that becomes a lot more tricky. But the beautiful thing in marketing as well in today's context is that you have a lot more new ways. So in Singapore, one of the new trends that we are seeing now is using NFT. So how do you use NFT? So it's not just only about buying and selling and keeping it as a souvenir, but really how do you use that to build a community, and how do you use that to bring about a new wave of people who are sick and tired of other ways of marketing.
Thank you. And guys, maybe specifically for Australia, is there anything different or nuances that you've seen here in terms of creating that brand presence that differ from the rest of the Asia Pac region?
Not really, because when we think about PR and marketing, our brand promise is to remain consistent on a global basis. So we're a global company, we have global merchants, and I think those merchants expect to have the same Adyen experience, whether they're looking at a marketing advert in Australia or a TV advert in the UK. But then in saying that, we still localise. So we still need to make sure whatever we're doing in marketing and PR, it works for this market. Yeah. So taking in, unique needs, maturity of the market, those types of things.
I think the systems and processes are consistent, but certainly how you address the market, making sure that the messages are contextual to the local market, that's really critical.
Thank you. One of the biggest challenges, obviously, for any business as it scales, whether it's global first or not, is attracting those first customers. And importantly, in Australia and elsewhere in bigger markets in the world, it's that push to get the first big logo. Are there nuances in your global first approach where you believe, are no-brainers for perhaps the Aussie startups that are out here today that they need to consider in terms of trying to get that first logo on the books?
Yeah, I guess I'll go first. I think that today we do have huge global logos with us. SAP is an example, some of the larger banks, Wells Fargo, etc. And it was really to be able to, it's really about delivering value to your customers, delivering value to your partners. And that's what you need to identify first and foremost, and then keeping the message simple, if you like. You should be able to get it down to 3 points, which we do, and then deliver it in a consistent way across the different markets in Australia, in Sydney, in Melbourne, and as you venture out of Australia across the globe.
And we're the same. So we look at when expanding in Australia, we look at the verticals we're strong in globally. So traditionally, Adyen's very strong in retail, high-end retail. So looking about who are those standout brands that we would like to work with and have as a logo. So the team worked very hard to get those, and we're proud to work with a large number of Australian retailers today. I'm not going to name them all today, though. But I think it's really key of knowing what you're going after and having that plan, and then building on that success with that to be signing the next one and the next one.
So going global is actually a very interesting concept in Singapore because there are actually a good number of Singapore companies that are registered in Singapore, housed in Singapore, but they don't sell in Singapore. They don't. So for some of the founders, C-suites here today, and then you're looking at international, globalizing your business, regionalizing your business, have a think about structuring. So it is important at the back on how do you structure your business in terms of where is your shareholding, how do you do transfer pricing, how do you do licensing, how do you move your money around. And that's very important because as you go global, if you do not get the structure right from the word start, from the word go, you're going to encounter different problems later on when you need to shift your funds around, when you need to, then you incur a lot of unnecessary taxes like withholding tax and stuff like that. So that is where Singapore jurisdiction and the way we set up our tax structure makes it a very useful fintech hub, or a hub for many things for that matter. So I think going global is interesting in Singapore context because there are a lot of companies in Singapore that are really more of a structured management company, but in terms of sales, they will always be in the likes of Indonesia, Vietnam, Thailand.
Thank you. I guess one of the things I'm really interested to hear about now with this global environment is the coming back to work piece. How have you found it with your organisations globally in getting people back into the office, and is that differing as a global organisation with sort of sets of rules and brand parameters? How are you finding the challenge?
Such a good topic, isn't it? I don't think you read every couple of days, you read about a new tech company changing or implementing or changing their strategy in terms of working from home or flexible working. At Adyen, we really value the face-to-face time. So we think that we're able to scale and innovate faster if we are together and spend that time. And we don't just mean in the office, we mean that with our merchants and our partners. We mean that with our regional teams and also getting together as a global basis in the Netherlands. So we definitely value the office time. We have brought in working from the office 3 days a week. It's working really well. We also brought in free lunch every day, which really helped to get people into the office. So I think being able to encourage people, but always having the normal course of life in terms of flexibility is important. And as a tech company, I think you have to have that now.
I think that we've adopted a flexible approach, so you could work from home or from the office, but certainly it's really meeting the objectives that are required. Having said that, we do encourage 2 or 3 days in the office every week, and to make sure that people do come to the office, we've tried to make the offices as conducive an environment as possible for the staff.
Do people come in?
Yes and no.
Now, one of the biggest topics when entering this market is which city to be based in. And so everyone seemingly has a different approach, and some are centric to one city, some decide that there's a rule around the people and have a rollout. But what's your specific approach to the Australian market for each of your businesses? You can start, Hayley. Go.
Yeah, it's quite contentious because we're obviously sitting here in Melbourne. But we decided to have our office in Sydney, and by design, we have the whole team in Sydney. Back to what I said before, we just think it's so important to have everyone together. Not to say that's the best solution, and whether that works in the future, but for right now, it really works for us.
Awesome, VJ.
I think we didn't differentiate between the cities, so it's really, are you the right person for the job? You know, do you have the qualification? Can you add value to Transdomain? So you can be based in Sydney, you can be based in Melbourne. We'll have both offices. We have offices in both countries, both cities, and we'll continue to take that approach.
Poor Adelaide, Brisbane, Perth. So interesting for us, perhaps looking at the region more specifically. In landing in Singapore, obviously some people set up licenses, but when you start to establish in the region, are there regional nuances, you know, perhaps in Malaysia, Indonesia, where you're required to have a country manager or lead in that country as you expand out into the region?
I think this was actually earlier echoed by one of our speakers as well, that you should always hire local. And from not just only in FinTech, but in all the other trades that I have been in the past, I will always strongly encourage companies to hire local, because without that, you don't. So I'll give you an example. Let's say you're a Singapore company going to Indonesia, and you make a business trip there for a week. You collected a stack of cards, or you collected a stack of LinkedIn, and they respond to you 2 weeks later. And they say, hey, I'd like to meet you, Babak, you know, can I have a catch you? So they call him Babak, you know, it's a way of addressing. Can I catch you for coffee? And, oh, let me check my schedule. Oh, all right, I'll be in Indonesia in the next 2 weeks. Then I'll come down and see you. You know, by then you lost the plot, you lost the opportunity. So hiring someone that's local, hiring someone who's able to be there to hustle, especially in that part of the world, in Southeast Asia, where it's still highly relationship-driven, you do need someone local there to walk the ground and to really sow those seeds.
Thank you. Perhaps for those in the audience that are from overseas, what are the nuances in terms of how you conduct sales or business meetings that are perhaps different from some of your global experiences? And I know you're fairly vastly experienced in the global remit. So what are the nuances that you see in terms of how we conduct business here in Australia?
Yeah, it's an interesting one. I lived in the UK and the US for quite a few years, so it is quite different. I think the great thing about business in Australia is it can be done on quite a casual basis. There's less formality in terms of doing business. But what's just as important is relationships. And it's not just building those relationships, it's maintaining those relationships over a long time. As we all know, FinTech is such a small world, and everyone moves around into lots of different places, so maintaining those relationships are key. I almost throw that question back to you, because you work with companies moving them into Australia, and they need to adapt to those nuances here. So what would some of them be for you?
Yeah, for me, I think probably the biggest thing when you know you've made it in Australia is that you've been invited to a number of wine lunches on a Friday afternoon, which means you've got deeper into the network than, you know, just having a pot or a schooner. And a lot of business is conducted in that much more, you know, friendship type manner. Obviously, being local here, a lot of conversations start with which AFL team do you support, and then broaden out from there. And it's something that, you know, it doesn't happen so much in the UK, whilst soccer or football, as I would call it, is a critical part of the fabric of the culture of the UK. It's very, very personalised here when conducting business, specifically in Melbourne, and I know in New South Wales for the other type of football that's a different shaped ball. But for me, like, it's a really interesting battle to kind of make those first 5 logos, and it really makes a much bigger difference, I've found, than expanding businesses into the UK or US markets in terms of the real big difference it makes in terms of that sales penetration. VJ, have you got anything else to add?
Yeah, we enjoy the open discussions that we can have with our customers and our prospective customers in Australia. They're much more open, and we're able to get into the heart of the matter much more easily. So that's a very positive thing in Australia.
I've been given 5 minutes, which is great, but as there are people out here that may have questions, I can even run and give the mic to you if needed, just to put him on the spot up there. But is there anyone out in the audience that you've got to run a long way? Do you want me to go? Feel free to stand up if you like.
The race is on, Jonathan.
I would usually, from my past experience when it comes to doing business, you do have to have market nuances. So before I comment on that, I think it's important to do a market background knowledge to check it up and see what your competitors are offering. And I think more importantly is also the value that you bring. Because if you're in your value proposition, if you already identify that I can save how much of your manpower costs for you, then would those pricing make sense? I think in Singapore, generally, so long you can articulate the value, because Singapore is quite a high-cost environment. So anything that can help a company to save costs and improve efficiency, you usually be welcome.
I actually think it's a really interesting point around payments from global first businesses is what currency do you, if you openly commit on your website to pricing, which currency do you put that up in?
Local. Local, wherever you can.
I mean, we really look at, because it's a global environment, so it's whichever currency you need to look at, wherever you are.
Anyone else for questions out there?
How do you really connect your people globally? Like, how do you encourage a global atmosphere within your workforce? What initiatives are there? What inspires them to be part of, a global enterprise like yourselves?
I can start with that. I really think that comes down to culture, right? So understanding what we're all doing when you're working for a company, so understanding the global strategy at the first point. Adyen is unlike any other company I've worked for where previous companies, the strategies changed every couple of years, or it's gone another direction, or we've acquired companies. At Adyen, we've had the same strategy the whole time, and it's quite a good place to work when you all know you're all on the same road and you all have the same vision. But down in terms of culture is you feel like you're part of an organization even though you're far away from headquarters, and that's all driven by culture, how we communicate with each other, and how the Adyen formula works. But being able to have those get-togethers regionally on a global basis, and it's not just, it's reigniting the relationships that you've already built, creating new ones, strengthening what you have, and then you really take that back to your office, and then you develop it from there. So I think you have mini culture, and then you have the sort of the global culture as well.
I think one of the things that we've seen work really well, especially expanding out-wise to create the culture, is the commitment from the C-suite, from HQ, to enter that market within about a 12-month period. And really what that does is align the strategy and the staff to really be part of HQ strategy from as early as you can. Obviously in FinTech, it's always sometimes a little bit harder. So when we were launching companies like Square, they needed to get their license. We hired the team a year before they could actually launch, and Jack could get out there and they could win their first customers. But certainly that embedment of making sure that the founder or the C-suite are committed to the expansion region and actually trying to demonstrate that really does improve and lift up culture, I've always found. Now, I think we're there or thereabouts. I had a minute, son. Any last questions?
I think we've nailed it, Jonathan.
Excellent.
Thank you.
Thanks all.
Thank you.
If I could
Please
just
put your
have
hands
the
together
next...
for BJ,
guys,
Haley.
ladies and gentlemen, before I forget, sorry to interrupt, since we are talking about going global, we have a Singapore FinTech Festival coming up at 2nd to 4th November in Singapore. So we are expecting 60,000 people to come to Singapore. So if you guys are looking at expanding globally, that will be a good conference to come and attend. Thank you.
Ruben can fit the first 10 in his place, so just give me a yell afterwards. Bring your own sleeping bag. Love Singapore, mate. Such a great place. And many great Aussie chefs cooking there too. The Tippling Club is one of my favourites there. Well, we're going to keep the theme going and continue to go global. That was a great question about culture, and maybe we can drill down more into that a little bit later on. But going global now, can we please welcome to the stage Ramal Gurkani from Zai, Victoria Richardson from Miko, Gordon Campbell from RDC, Rich Data Corporation, and the man who can help it all happen. It is Andrew Barnes from Austrade, who is your moderator. Please put your hands together and give them a big welcome. Welcome all.
So, hi everybody, and thank you so much for joining us at this session on Going Global. I think the first question to ask is, why is that important? And it might seem obvious, but actually we can actually answer that question with some numbers that we know about the sector in Australia. So, going back to the 2021 FinTech census, we actually know that 40% of Australian FinTechs earn international revenue. About half have an international presence, but fully 70% are intending to expand into at least one new international market over the next couple of years. So clearly it's really critical to understand how to execute on those international opportunities. And we're really lucky to be joined today by 3 really experienced leaders from Australian FinTech businesses that have shown strong international success. So a really great opportunity to learn from their experience, their understanding, and their insights. We will also, if you'd like, think about if you have any questions. We will have a bit of time for questions at the end. If you like, just put your hand up when we get to that. First to introduce myself, my name's Andrew. I'm from Austrade. I'm responsible for the support that we provide to businesses in the tech sector when they go global. I'd also like to really one of the things that's most important for this sector is the partnership we built with FinTech Australia. What that in practice means is bringing together the best of our resources and FinTech Australia's resources when we're helping Australian FinTechs to go overseas. So just thanks to FinTech Australia for the team for the conference that they've put on. And also it's been a few years since everyone has been able to get together in this way. So thanks very much to the team from FinTech Australia. So time for introductions. I'm going to go first to each panellist, once in turn, and then we'll have the questions of all the panel. First is Gordon. So this is Gordon Campbell. He's from Rich Data Co. So Gordon is the Chief Product Officer and Head of Strategy, but he's also a 30-year software veteran with roles covering architecture, design, and product management, and onto the customer side. And most recently, before his current role, was an industry director at Oracle. First question to you, Gordon. Please just first tell us about Rich Data Co.
Thanks, Andrew. So Rich Data Co, RDC as we refer to it, is a company that's trying to drive inclusion in the credit cycle, and we do that using AI and data on our RDC platform, which is an AI-based decisioning platform. We started our journey 7 years ago in Sydney, and we have representation in Singapore, but also now looking to expand into the US. We've been looking a lot at mixing research and driving organic research in an R&D sense in the AI domain, and working with the universities in Sydney at this stage, and bringing that into a productized form to take into market. For us, it's a lot about how we can help people who are kind of unknown primes, banks kind of traditionally, and lenders traditionally can't evaluate people that don't have a credit history or credit file of any significance. So by using AI techniques, using the new data sets that we have available, we're able to bring better understanding of the potential health of that borrower, and then be able to potentially make a decision to lend or not lend, as the case may be.
And tell us about what was the experience expanding internationally, maybe particularly your experience in the US.
Yeah, this is actually our second entry into the US. We started a little while ago initially by putting somebody on the ground, and probably we're very underprepared, but we decided to go to the US in a much more structured way this year. We looked at the market here. I mean, if you read the numbers, we've got 5 major banks, but actually in raw number terms, we've got just over 50 banks that are operational. In the US, we look at it as 4,400 operational banks. It's obviously a scale decision for us to head off to the US. And with the US market, it's obviously got a range from very, very small, very regional banks all the way up to the big guys. And the 5 banks we have here all would appear in the top 10 in the US. And so really, for us, it's about targeting that top 100 banks and using the evidence of our success here, where we've worked with 2 of the majors already, be able to translate that into the US market.
Just when do you think is the right time to grow staff when you're in a new market?
Yeah, it's a tough question about onboarding people. We think this time we have chosen to go to the US with a partner so that we don't have to put boots on the ground in every role in the organisation. So we're using a distribution model which will be resale-led. That way we can bring our expertise, but in terms of talking to customers and engaging with customers, we've got a sales force and an existing potential commercial relationship with those customers, so it takes a lot of the administration side away from us.
Fantastic, thanks Gordon. I'll next move to Victoria. So Victoria is the COO of Miko, has actually a long international career in the technology sector and was previously the Chief Strategy Officer of the Australian Payments Network. First maybe Victoria, let us know about Miko.
So the original idea for Miko was to give people tools to be able to control their own data. So you have to flip back 10 years before everyone understood that it wasn't good for Facebook to monetize your data and not tell you they were doing it. And Katrina Dow, the founder, had this idea that it would be better if people had control of their own data. Now that concept is really familiar to people. There was a report from Capgemini that came out 2 days ago that is talking about organisations need to have this hive mind and this fishbowl mentality, and that if you create transparency and collaboration, people share more data and you get better results for the customer and for the enterprise. But this was all before that. So Katrina had this idea that people should have control over their data. In the intervening 10 years, what we've done is pivot to sell tools to enterprise customers. And so we're present in Belgium, and just picking up on the sort of when do you go overseas, we started in the European market because it's that much more advanced in terms of data privacy. So GDPR meant that a whole host of organizations were thinking very carefully about how they use data. And it's not just the regulation, it's the impact of that regulation. So if you look at the organizations that have been fined as a result of GDPR, Meta is there twice, Amazon, Google, that's just in the top 6 list. So what that means is that other organizations looking at data, like banks and government, have to think about it differently. So it's the existence of the regulation and what organizations do as a result of that.
So it's a really interesting point. I think that traditional view of businesses going global is you start in Australia, you exhaust the Australian market, and then you go further. You have grown globally before really Australia is so much of a relevant market for you. So what was that like in terms of planning where to go, how to prioritise, and your experience as a different kind of scaling business?
It's a really good question, because the plan wasn't let's go to Belgium. So the plan, I guess, like many companies that come out of Australia, was choose an English language market. I have to say that language barrier is real. We now have Belgian engineers and Belgian account managers, because although the whole world does speak English, they don't want to. They don't want to have big conversations in English, so we had to build on Belgian speakers. But the first step we took was to go to the UK, and there were a number of things that we got out of that. We joined in some of the accelerator programs with Visa and MasterCard, and that really helped us hone our ideas about what are the business problems and what tools do organisations need to solve those business problems. And then it was through that we sort of transitioned over to Belgium. But we got a lot out of being in the UK early, then we transitioned to Belgium, and then recently, I think probably similar to Gordon's story, we put someone back into the UK probably a bit early. I don't know if anyone listens to the Starting Greatness podcast, and Mark Leslie appears on there quite often, and he has this great thesis around the types of salesperson, people that you need, and it starts talking about Renaissance salespeople, and I think for a startup in the initial phases, you need that Renaissance salesperson who can service remotely and then build out from there. So we probably put someone in a little bit early, but going there in the first place gave us the stepping stone into Belgium.
Fantastic, thank you. Over to Rimal. So this is Rimal Gurkani. He's the Chief Commercial Officer of Zai. He was actually founding co-chief executive officer, and also has a really extensive background in financial services across London and Europe. Formerly the executive director at Standard Chartered's SC Ventures in Singapore. Rimal, so Zai, from founding to 8 markets in 7 years. Tell us about it.
Sure. So Zai is a global payment orchestration platform founded in Australia several years ago. We now operate in 8 countries, around 275 people. We focus on providing payment solutions for digital native businesses. So it's a full stack payment offering from onboarding to payment in, payment out, reconciliation and reporting. We've focused a lot on the domestic market over the past several years, and more recently have gone on a global expansion, now offering solutions for corporates here and abroad, moving money around the world. We've gone through different ways of growing. So we've gone through organic growth over the past few years. We've also gone through inorganic growth to accelerate our capability in new markets. Given the cost and time of regulation and licenses, inorganic growth has been a really positive journey for us as we expand into new markets.
And I think we know from Austrade that quite a lot of companies go to the US, to the UK, to New Zealand, and to some extent to Singapore. They're probably the big 4. I think from talking with you, possibly have a bigger focus on Southeast Asia than some other fintechs out there in the community. So tell us about that.
Yeah, so I mean, for me, when we looking at expanding new markets, I essentially followed the data. Outside of India and China, you still have 65% of Asia that is unbanked. It's a $1.7 trillion payment flow within Southeast Asia. There was $15 billion of new investment into fintechs just last year, which is a 50% increase from the year before. So it's a great market. It's a great, Southeast Asia, great region for companies to expand into. Very digital economies, young economies, tech savvy, and they are experiencing the same problems that many markets experienced probably 2 to 3 years ago. So it's a great platform for people to expand into. I think it at times can be easier to go to the US and to the UK, but we took a conscious decision to go into Southeast Asia to try and exploit some of those challenges that exist.
Yeah, fantastic. Let's have a think about questions from the floor. So get the hands up if you have any questions. Have a think about it. I'll do one more question to the panel, and then we'll pass the microphone around. Just hands up if you do. Question from me to everyone, and someone can jump in. So when you are going about the business of establishing and scaling new markets, what are the kind of resources that you think it's important to draw on that perhaps not everyone does in your experience? And who'd like to jump in first?
I'll jump in. We had some very good advice very early on, which said, pay for good advice. And I think we've done that all the way along. Good legal advice, good accounting advice, and a lot of good advice sourced from our network. I think, events like this where you talk to people about their experiences, it is essential and valuable. The other one that and this is a shameless plug, but the other one that we didn't really understand for a little while was what Austrade could do for us. It was 50s in the bank. But it really was a surprise to us of the kind of resources we had available. We got some reports on the North American market that were very insightful, and then specifically just this year, the market immersion in North America was a great chance to validate our thoughts and see firsthand some of the things that were being presented at Lend conference. So yeah, we certainly kind of appreciate that alongside of all the other kind of sources of information we've used.
Yeah, I'd agree with that as well. I think there were introductions really matters, and we found that really helpful with Austrade. So Miko was part of the UK FinTech Bridge and got practical sort of qualified introductions to banks, which is invaluable. And picking up on Gordon's point as well, resources, we look at 4 things in a market. We look at the regulation, we look at the pace of innovation, so are banks or governments moving in this space. We also look at consumer appetite and the ease of remote servicing. And I think that Austrade produces reports that can give you a lot of information on that. So I think understanding the market, I think your point was follow the data. I completely agree.
You're not allowed to say Austrade.
I'll say FinTech Australia. No, look, I'd have to echo what's been said so far. It's very easy to make the mistake, I think, of going to a new market, planting a flag and going all in. There are a lot of free resources out there. Austrade, FinTech Australia, there are FinTech associations in every market that you can leverage that are all willing to help. And using that data has been incredibly helpful. Building a network, going in market first with partnerships, and then following up with commercial teams has been pretty helpful for us.
I think it's really interesting to hear the theme coming through this, that it's partly about accessing opportunities, but also the management of risk, not making the bad decision, not wasting the time from whatever resources people are drawing. So that's really interesting. Do we have any hands up from, does anyone want to ask a question? So we've got one down here.
What do you guys consider to be the number one?
Oh, the mic's off, I think.
That work?
Oh, good to go.
Good to go? There we go. What's the number one challenge of taking an Aussie early stage company offshore and trying to scale globally?
Number one challenge.
If you had to pick the number one.
What's the number one challenge taking an Aussie fintech offshore?
Taking Aussie fintech offshore. I personally, I don't think Australians moving the fintechs offshore has always worked well. It's a challenge. I think it's a cultural challenge, number one. And I think that if you look at history, where people have made mistakes is taking the existing team and trying to grow it remotely. I would echo what was mentioned in the previous panel here, and that is having local resources on the ground who understand the culture, can speak the language at business grade is very, very important. So that's number one, having the right people. And number two is not underestimating the change of regulation. If I look at Southeast Asia, 10 markets, 10 regulators, it's not easy. And having that structural platform correct goes a long way, because if you go into the market, get it wrong, rebuilding it is a very difficult task.
I think I'd support that. So although Miko got first traction overseas, the development team was here. And that's quite hard. So you've got sales and marketing over in Belgium and the development being done here, and then working out at what point in time to bring developers on locally. And now we all say, oh, we've got this great follow the sun model, but it wasn't like that in the beginning. It was very different. It was, where is that sun? So I think getting that right and learning about how you grow the team locally. And we find that banking customers, they want engineers locally as well. So how do you then create sprints and cycles where you've got two sets of developers has probably been the hardest challenge.
Time zone. Doing things from here, I'm kind of tired of getting up at 5 a.m. and doing calls with people. Yeah, I know, and so you're having your coffee and they're wishing that they were heading to the bar. So yeah, look, that's been kind of the challenge on an interactive basis, is just getting the heartbeat and the communication with them that works. We've done some sort of trips with our proposed partner in North America. It just, you make so much traction when you're on the ground. They generally like people who talk funny, so we get along all right. But the relationship you build in person just has been the real key, working with partners and also potential investors over there. So it's been being in person. I think back to your point and to the point from the previous panel, people are hard, right? So getting the right people and the right fit for our culture on the ground over there that understand the local language, local culture, local custom has been the challenge, and we were really particular about that process. I wasn't really a people person, but we now have an HR group. We do onboarding. It's great, but it's really important. It's something I completely underestimated at the beginning, and kind of, if they were personable, I'd go, that's great. But there's so much more to it, and it's the key to success. People are the key.
I think you're a people person. Go on.
Sometimes.
Any other hands up from the room? We've got a suspicious-looking gentleman over here.
Yeah, really interesting panel. Just interested in the views of the panel on Australia's brand, particularly around Australian fintechs, and whether that has been of any use to you in terms of credibility and reputation or otherwise, or if not?
I'll go first. I think the brand equity is growing. I don't think it was there probably 5 or 6 years ago, but we're seeing more international investors deploying funds to Australian fintechs. A good example is Immutable, very large investment this year from Intersekt from Singapore, which was, I think, a great outcome, right? And a big sort of sign of approval of what's happening in this market. So I think it's definitely heading in the right direction. It's not easy, actually, for foreign investors investing into Australia. I don't think the government makes it incredibly easy at all with levels of approval that's required, but I think it's getting a lot better than it was several years ago.
Yeah, I'll kind of add that I think it works quite well for us. Our environment from a regulatory point of view is mature, and the ability for us to operate and prove that we can do things in this market with the right level of addressing risk and sustainability, it makes sense. Then when we went to North America, and we've also done some exploratory work in the UK, it feels similar, and people can identify with what we do here, and generally with the fact that Australia has I guess a litmus test against what can be done elsewhere. So I think it works quite well, and I also kind of like the fact that when we land, it's not necessarily for us, it hasn't been anyway credentialising Australia's market. That's almost a given. It's how we've operated in the market and how we address the problem over there. I find a little bit more education about specifically our domain and what we're doing in AI. I went to a session the other night on quantum computing, which now I know a lot more than I did before. But Australia is a hub for that knowledge for everywhere in the world. And I think for some of the work we've done in AI, some of the work that's been done in an innovative sense to bring new solutions to market, I think it's respect. I think there is a respect for the brand, if you like it. I'm a New Zealander, so I can say that, right?
So I'm a Brit, so I can say something. I think just in terms of Miko's focus, Australia is known to have very well developed digital payments infrastructure, high smartphone adoption, so strong consumer uptake of innovation. So I think that carries something of a brand. So you're not coming from a country that is steeped in checks, and so I think that really helps. I do think though that there is still this thing of it's a long way away, and we do meet that in Europe. So and you have to back that up by breaking down those barriers and putting people locally. But yeah, brand strong from consumer adoption and tech, but still a long way away.
So I'll wrap up with one last question for the panel, and noting that we're all together again for the first time at Intersekt in a while. Business is really different than it was 3 years ago. I think international business is really different than it was 2 or 3 years ago. So for you, what do you think? What would you say is the difference you most observe? And maybe start with you, Gordon.
Yeah, so I guess it's quite a personal view. We've been able to do 2 incredibly large projects completely remotely. I think it's unlocked the ability for us to be here and deliver anywhere, which is fantastic. The thing that's still a challenge, and we were talking about this before, is it's just the personal relationship. It's a lot harder to build remotely. So I think we're getting back to doing it. It's great to see everyone here, and it's really noisy out there. There's a wall of sound, and that's because people are able to kind of interact and talk. So I see that it will break down, and we'll see a bit more travel. But I think the delivery side and kind of the logistics of being successful remotely is definitely unlocked for us anyway.
I agree with that. I think pre-COVID, online meetings felt a bit stilted, and now there are lots of memes about, oh, you're on mute, but it's not awkward anymore. And I think we've all met people first time online and know them for years, only having known them online, and I think that really helps with remote servicing, and it means you can put a lot of effort into a market before you take the expensive decision to put people on the ground. So I think that's really helped.
Yeah, I'd agree that we did a very large M&A exclusively on Zoom during COVID, which is incredibly difficult and would never recommend it to anyone ever again. But it's good that Intersekt is back on and we're meeting people face to face. I think we have a challenge, like many people do, to get people back to the office, and that's hard, but very important to ensure that the culture remains. but I think they're the two differences.
So, fantastic. Thank you so much. Please join me in thanking our panel for today.
Thank you.
Thank you, Andrew, Gordon, Victoria, and Ramal. I was thinking about that conversation we had with Jonathan a little bit earlier about sort of doing business in Australia, and you know you've made it when you get to the Friday wine lunches, and of course you choose the right footy team to go for. We probably should ask that question of every guest today. Which team do you support? Anyway, that was a great convo about going global. Well, next we're going to dig into the ethics and practices around responsible lending and the industry's future. How fintechs are leading the way. To discuss and debate this, we're please welcome to the stage Richard Shanahan from TikTok with a C. He's not going to be doing short memes, I don't think. Tim Boskett from Intersekt, Yodlee, and Justin Joff from Flux Finance. To lead this discussion, our moderator is Jackie Duncan from Stone and Chalk. Welcome all to the stage. Oh, there he is. Exit stage left. Entrance stage left. All right, guys, over to you.
Thank you very much. Hello, everyone. 1 second here. So I thought it was kind of funny that they picked the Irish moderator for this, because responsible lending maybe don't compute in my head, you know, which is really, I thought it was kind of funny. So obviously those two words, yeah, they don't make a lot of sense when you grew up in the GFC and saw everything kind of crash. So it's definitely a bit ironic. But I'm joined here by 3 amazing fintech startups. And so I'm going to get you guys to introduce yourself in a second. But for those of you who I don't know, I see some friendly faces, but for those of you I don't know, my name's Jackie Duncan, and I'm the head of relationship management for Stone & Chalk in Sydney. And so if you don't know who Stone & Chalk are, we are the largest innovation community in Australia. So we're a not-for-profit, and we were also founded in FinTech back in 2015. We have since expanded into more emerging tech sectors, but we are very strong in fintech, with about 70% of our residents in Sydney actually within that sector. And I'm very pleased to say that TikTok and both InvestNet and Yodlee are actually residents with us in Stone & Chalk, and maybe we'll get Flux someday, so we'll see about that. Okay, so I'm going to have Tim, do you want to introduce yourself and a little bit about InvestNet Yodlee?
Thanks, Jackie. Tim Poskett, Country Manager for InvestNet Yodlee, based in Sydney. Run the operations for the organisation across Australia and New Zealand. It goes from go-to-market strategy and how we bridge across the region and also expand into Southeast Asia. For those who don't know, InvestNet Yodlee, one of the largest global data aggregation analytics platform. Head office is in San Francisco in the US, and we power a number of leading fintechs both locally and globally. Many of you would have seen them today. TikTok is one of those organisations as well. And we're also under CDR. We were accredited in 2021, so our open banking solution is now live and really getting behind the CDR regime and really trying to power that further into the ecosystem.
Richard.
Thanks, Jackie. Hi, Richard Shanahan. I'm Chief Product and Data Officer from TikTok. TikTok with a C, as we said. TikTok is a digital home loan platform. I've been with TikTok since 5 years, since 2017, the heady days of our launch as a startup through to scale up. We launched initially with a retail proposition, a B2C, which is based around faster, smarter, simpler home lending. And we've evolved that proposition to a platform proposition now, and we service brands for launching their own home loan proposition or solving for discrete parts of the decisioning and origination journey.
Is it Justin?
Hi, my name's Justin. I'm one of the co-founders of Flux Finance. Flux is a financial wellbeing platform that helps over 300,000 Australians. We combine gamification content, educational content that is, and a whole lot of data to help people become more financially well and less stressed. And we've got a daily business news podcast called What the Flux, and a daily newsletter that goes out to over 35,000 people.
That's awesome. I actually have your newsletter. I got your EDM, and it's honestly really good. If you don't receive it, I would recommend that you subscribe. It's really, really good. It's very informative. Okay, so to kick off, I gave you a taster of what I think responsible lending is. It's basically don't bring a country to its knees. But I would love to know what you guys define responsible lending as, and maybe from your own perspectives, but as well as your companies. Jim?
Sure, thanks. I mean, from my own personal perspective, it's ultimately about responding lending to individuals or organisations, but with full transparency throughout that process. So, you often hear stories when individuals and organisations have not had full, clear understanding of the commitment they're getting into, and also the full terms of that agreement. So I think ultimately it's providing full transparency to the end customer, being business or consumer, about what that is. I think if you look throughout, the process today, people have been through mortgage applications, personal loan applications, and that full process is disjointed in part. And I think how, from Australian obligations to help consumers to provide strict obligations around that, I think helps businesses, but also consumers. And I think we've got somewhere to go in terms of helping them with better data and quality, but then also making it more efficient and automated without providing a very slow process. Personally, I went through that process myself to get a mortgage a few months ago, and I think I uploaded about 28 PDF documents. So I think, I didn't use TikTok, by the way, so I should have done. So, you can tell Anthony that. But I think there's clearly a long way to go in the process, and I think,
Yeah, and that's just one type alone, right? So, Richard, what's your definition of responsible lending?
Okay, I'm going to go really simple. I'm going to say responsible lending, the true sense is understanding your customer's true capacity to borrow. Now, there's a lot in that, right? But, at TikTok, we really love responsible lending. We love it so much we built a platform and a business around it. And we take it really seriously. It's a societal obligation in the true sense of making sure that people are living within their means and borrowing within their means. And if you look at, I'm sure we all do, the APRA quarterly banking statistics, there's some really interesting numbers that come out in there. What we can see in last quarter, I think really nearly 25% of all loans that were settled had a debt-to-income ratio of over 6. That means for every dollar you earn, you owe 6. That's quite scary, right? So what's going to happen over the next year and 12 months, as you heard some of the other speakers talk about, there's a big chunk of fixed rate home loans that are going to roll off, and these people have borrowed these at maybe like a 189, a cheap rate, hot deal, but they're going to find they're going to roll to a higher rate. Now, their capacity to borrow and service that loan is going to be really eroded. Their ability to live is going to be really eroded. So we see responsible lending as a way to solve that. Now, traditionally, it's been too hard. We'll get to it. We heard that in the Royal Commission. But, it doesn't have to be, and we're going to talk about that today, and we'll unpick it a little bit. You just need to design for responsible lending and what your customer needs from the outset.
That's really good. And Justin, what about you?
I'm going to take a bit of a different approach to responsible lending.
Please do.
So, I mean, obviously we know the minimum standards of responsible lending that ASIC set, and that's totally, fine. But really, when you think about the minimum standards in lending, as opposed to the minimum standards across, in criminal law, you think of minimum standards of not stealing. It doesn't teach you how to be a good person. It just tells you you can't steal. So I think there's a big difference between responsible lending and lending responsibly. So I think in terms of lending responsibly, what the responsibility should be is there's a key part of education around this process. I mean, we know from our community of hundreds of thousands of Australians that this is a really, really significant milestone in their lives when they take out their first home loan or even car loan. And it's a really scary process that a lot of people don't know or understand what that process looks like. So I think it's incumbent on all lenders to actually be responsible by taking consumers through a journey. And that journey starts pre-loan, where they can understand what they need to provide in order to be accepted as part of that credit decisioning. It's during the loan to encourage people to pay down their loan faster and get out of debt as soon as they can. And even post-loan, it includes how do we get people back on track or recover so they can focus on their next major milestone in their lives. And I think, it goes to the extent of even when someone gets rejected from a loan, how do you tell them how they can improve for next time?
Yeah, I love that. And actually that leads us really nicely into our next question. So we're going to talk about, the ins and outs of lending in a moment, but let's talk about that journey prior to even getting access to funding. How can we better consumer education, financial literacy, and also give choice to improve financial health? And maybe we'll continue. you want to continue? Because you were on a roll there. I love it.
Sure. So, I mean, just for context for everyone, what we know is 1 in 2 Australians struggle with basic financial literacy. That's part of the Hilda report that the Melbourne Institute does every couple of years. And that impacts on all parts of their lives, whether that's taking out a credit product, whether that's investing, whether that's just understanding how to do some basic budgeting. So we know, especially from our community as well, that right now financial stress is at its highest levels it's been forever, or at least since we've been recording it. And I mean, we all know that the cost of living is rising, inflation is rising, and the uncertainty around our economy is really, really scary. So for a lot of people, it's really important that they're positioned at a place where they understand the process that they go in before they apply for a loan. And, you know, it's not just everyday consumers, it's also employees as well. We know that 61% of employees say that financial stress is their number 1 cause of stress. So making sure that they can be more productive in the workplace, retained in their workforce as well, also contributes towards responsible lending, because if you don't have a job, it's often very hard to get a mortgage. So I think it's really important that this journey starts way before that point in time decision, which is currently at the point in which you apply for a loan.
Yeah, and I mean, like, you know, in school you learn algebra and different kind of math. It's like, actually, I don't need this. I'd like to prefer to actually maybe how to get a loan and what that looks like and how to run my day-to-day financials. It's probably more valuable. And you mentioned, you know, it might be hard to obviously get a loan if you don't have a job, and that kind of also opens the door to accessibility and inclusivity of lending. So let's talk a little bit about that, and maybe Richard, you can speak to this, because I know TikTok do a good job of this.
Yeah, so I was just continuing on that thread. It's, you know, the TikTok mission since day dot has been about demystify lending, right? It is about understanding your financial health, to Justin's point, and know when you're ready to apply. The purpose of that is to make sure that, you know, it doesn't have to be this horrible, invasive, intrusive, anxiety-laden experience getting a home loan, you know, uploading 28 documents, it takes a long time. So much so that you have this PTSD effect that you don't want to apply for a home loan for another 6 years, and then you're locked into a, you know, 5.1% rate and become a mortgage prisoner. It doesn't have to be that way. So, you know, TikTok and, you know, what we see with other fintechs out there today is there's a real commitment to demystifying lending, making sure you know when you're ready, understand your financial health, and ultimately that's going to empower the consumer.
Yeah, and I think, you know, like getting a mortgage, and I know we're specifically just talking about mortgage shares, but everyone has a right to a home, right? So, you know, there's a lot of hoops kind of to jump through, and I think you do a good job of kind of actually demystifying that, and I know that there's a lot of speed there as well, which is really cool. I did the 28 million documents as well recently, so I feel that pain. And actually I told Richard, and he was like, it doesn't have to be like that. So I hear you. Do you want to touch on the inclusivity piece?
Inclusivity, you know, it is a tricky thing because lending inherently, I don't want to shock anyone here, it is biased, right? You need a job, you need an income. But, you know, the inclusivity piece is really, it's about understanding your financial health. You know, and if you use really plain language, really accessible nurture sequences and journeys and content that are easy to consume, so you can build up a picture of your financial health, that you're going to buy, you'll feel included in the ecosystem of lending over time. But it is a journey, right? And financial commission for understanding financial health is really important for Australia.
Yeah, absolutely.
And I'd also add there is understand your financial health before you go in for the loan. So I think, you know, people who have maybe it's their first credit experience or they might go through that process, but unless they're clear about where they are, do they know their credit score, have this in their live transaction banking data, until they go through that process, they might not know where their credit score sits. They might not know where their live, you know, transactional data. And, you know, at Investnet Yodlee, we power a number of leading PFM wellness solutions. You know, one of those is WeMoney, were announced this year recently, where, you know, powering them with an live open banking solution. And ultimately, the view there is to help those consumers to get that better loan and better facility, because they may be, you know, overpaying that facility. They may be on that 5.3% loan and not have an understanding of that. So I think it's not just a one-off thing, it's an ongoing awareness. And I think, you know, Australia, if you look at the global perspective, and the previous session is probably very high financial literacy compared to other parts across the world, and I think has a good understanding of that, but there's still way to go.
Yeah. And I mean, you touched on open banking, like obviously it's all about choice, right? That's the whole point, is that you should have choice.
Exactly. I mean, that's the full ecosystem-driven, objective is to have the choice. Obviously, whether the success is today is another story. But I think ultimately to provide the consumer ownership of their own data, to have a better choice, to have choice on a better loan and better facility. Is it right? And you go back to the question of what is responsible lending. It's ultimately to allow the consumer to control their own data, to have a better decision on what they want. They may actually only want a shorter term facility as opposed to longer, a 30-year mortgage, for example.
Yeah, great. So it leads us into, fintechs do an amazing job in what I'm about to ask next. So how can data and automation improve responsible lending? So the obvious things are speed and accuracy, but what about decisioning, customer service, or customer retention, for example? How does your company use data and automation for those reasons? Richard, we'll kick it off with you.
I'll go there. Thanks, Jackie. So, that is really the crux for how you solve for responsible lending. Data and automation is key. So if you think about lending decisioning, like when you go to apply for your home loan or whatever that journey looks like, there's really 4 key questions you're trying to answer. Is that property okay? Are you who you say you are? Is your credit record okay? And can you afford it? Right? So those 4 key questions, but each one of those can be underpinned by data and automation. If you take a consent, collect and enrich and a decision approach to each of those stages, working with partners like Yodlee, right? You can then embed that automation and you can embed a really clear, accurate picture of financial position of your customer. And what you'll find then is you can then put your people, your contact centre agents, your home loan credit assessors in the middle of the automation, a true human-in-a-loop approach. And they can actually start having really meaningful conversations with the customers, which is actually really important, rather than doing menial tasks. But you have, with data automation, you're going to embed quality understanding of financial position, and you're going to free your people up to do high-value work.
I think there's a massive advantage to having that human element, for sure. And, you can let the computer do all of the data crunching and then put the humans at the face of your business. It's really cool. It's really good. Tim?
I think, from my personal perspective and from Yodlee, I think it's automation, exactly what Richard said. The more data points you take in, be that credit bureau data, be it bank statements data, whatever that data point is, will ultimately assess that process. Not only are you saying yes quicker, you're saying no quicker to help that end consumer getting the right back to responsible lender, the objective for them. I think also there's probably a need for automation on the lending platform. So obviously, you have your own platform, but there's other organizations who assist with the automation. So I think if you look, a few years ago and even still today, many large organizations are still not doing that today. They're still not implementing decisioning sessions. They're still not having, automation, which ultimately would speed that process up. So I still think today there's organizations who are, large tier lenders that are still not doing that today. So I think it's important that that will only speed up the better adoption and then ultimately give the better response to the consumer, and is also not just from the outset, it's probably retention as well. So Tim is a customer, but actually how do I continue Tim to be a customer? How do I continue to use data better from an ongoing basis to keep, alerts on his profile? His credit profile might change, then how can I offer him a new facility throughout that process? So I don't think it's just necessarily from the get-go, the origination, it's also origination, but then ongoing to keep that customer more engaged and valued throughout the sort of value chain.
Justin, what would you like to add?
So I think obviously the whole lending system has changed significantly over the last 5 to 10 years, and it's amazing that we now see instant decisioning or close to instant decisioning on home loans and a whole range of different lending products. I think with instant decisioning often comes a yes or no response, which is binary. And for so many people, that means that they actually, if they are rejected from a lending product, they don't know why. And that can be a really frustrating experience for a lot of people. So, we hear from a lot of our consumers and users of the app that they don't actually understand why or how they can improve their position. But what we do know is everyone wants to improve. And so I think there are 3 key steps to actually helping people improve on their financial journey so that they can become more accepted or fit within the credit decisioning of a particular lender. The first is around knowledge and building education so that people can consume really snappy, engaging and entertaining content that they can consume and understand how they can improve. The second is around building really strong habits. So incentivizing people to adopt those positive habits, often through gamification, so that they can drive forward in their goal, whatever that might be. And for us, what we found, which is really interesting, is that the third key pillar is around community and building a community of people that are actually in the same position, so that you can then speak to others who are like-minded in a safe space where they've already had lived experiences and can learn from those experiences as well, so that then wherever they're at on their money journey, they can then hopefully achieve that yes in the future if it's originally a no. And I think, when we say being a good lender or a progressive lender, it's not just about saying no and giving reasons. It's actually good business, because being transparent leads to higher loyalty, greater trust, and often will lead to more financially engaged consumers, which will lead to a lower probability of actually defaulting later on as well.
Okay, thank you. And, this space, FinTech has always, in the last, I suppose, 10 years, big corporates and government and regulators have been like, okay, what can we do here in Australia to facilitate this? How can they make this easier to actually provide access to lending? What can they do?
Yeah, sure. I mean, from my perspective, it's purely around CDR. So ultimately, higher adoption and utilization across the CDR ecosystem, and removing and reducing barriers to entry will allow more organizations to get a broadness use of data. So we've obviously seen that recently with the agency model under CDR representative, which basically allows a lot more. I think we have now 36 or 38 recipients utilizing that data set. That's still very small, so I think that's still got a long way to go. I think that will do great part in terms of having a full complete picture, both with CDR and non-CDR data. That's probably the main thing that we've been lobbying very hard with the government on, and given our view around how CDR can broader help the ecosystem. But if you're looking at an individual's broader financial picture, it's not just the bank account, it's also their broader financial position. So what's their stock savings, what's their in their superannuation account, so actually how is that individual position? So I still think today, from utilising data, under CDR is going to be a blended model, a hybrid solution from our perspective, and how we then do that. That's probably the main key focus from our side.
Yeah, I think fundamentally we just want to talk. We want to be able to engage really regularly and reliably with government and politicians, because we want to build the future of lending in Australia together. There's a lot of fintechs out there with some amazing ideas, and you've heard from a lot of them today and tomorrow. We need more of an audience. It doesn't have to be regulator to incumbent, big lender. It needs to be more open dialogue. Now, there is some amazing stuff happening. Consumer data right is the bee's knees, and it will be transformative for Australia and hopefully globally as well. And I think, the roadmap for CDR is really exciting too. You heard action initiation. That is really, really important. And opening up other sectors really, really critical. Now, I think tactically there's some stuff that the regulators can do over the next 12 to 24 months, particularly around mortgage portability. I'd love to have a beautiful technical solution, hit this, refinance today, port your home loan across, get a better rate. But what we find today is when you try to refinance, the incumbent gets a say in it, and that's where the cashback comes in. It's too late in the game. If you really cared about the customer and you're a responsible lender, that might not be the place you want to do it. So I think we need to look at a way that you can free up the movement of home loans through the economy.
Justin.
I think these two are probably in a better position to speak from a lending perspective, but again, from a consumer perspective, I think the biggest progression that will be consumer data rights, but also in particular allowing consumers to have choice, portability, and also making sure that they have the right information in front of them to make the best decisions. Often consumers are misled by certain pieces of information, or they might not actually know what's right or wrong. So enabling people to have a more, broader knowledge base, and also helping them actually on that journey will, I think, be a key element to it.
I'd also add that if you think about the end consumer, they really don't care what open banking is or CDR is. What do they care about? They care about getting a better loan, be it a mortgage with another lender or cheaper credit cards. So I think at the end of the day, it's ensuring that the consumer has a better choice in the solution that they're selecting, and that they get more awareness on where the use of their own data and what it can do. So I think, it's great, there's other sections on the roadmap, but I think we really have to nail and hit down on what we've done so far, and to get, higher adoption throughout the ecosystem before we sort of, run it hard at other segments straight away.
Cool. So access to information and choice. That's it. And just We'll go to a Q&A maybe, but maybe one sentence. What's next for InvestNet Yodlee?
What's next? I mean, this is the year obviously for more adoption and focus around open banking. We've got our recent credit accelerator solution, which we're working with a number of lenders across the both mortgage and non-mortgage space. So that's really a key focus for us. And then also branching out into new regions across the APAC area.
Exciting. What about TikTok?
Busy as always. I think we've got some pretty exciting changes to our proposition for our retail brand. We're working in partnership with AFG, which a lot of people probably would have seen, as a way we can help more of our customers. We also have a couple of very large brands looking to go live with a home loan proposition in the next 6 months. So watch this space.
Awesome. What about Flux?
We've got a pretty big vision that we want to build the most financially responsible and educated generation that's ever lived. So how do you do that? You create a whole lot of gamification, amazing content, and a community, as I mentioned, to really get people together and passionate about financial education. And I think when you look 10 years ago, if people would speak about mental health and well-being, you couldn't imagine anything that would incentivize people to meditate for 5 or 10 minutes a day. And then Calm and Headspace came along, and it changed the game around mental well-being. We see there's a huge opportunity within financial well-being to change the game, and Flux is going to be at the forefront of that.
That's so exciting, guys. It's going to be good. Does anyone have any questions? Everyone's like, we know, we have loans, we know. We have one here in the front.
Hi, I run a digital lending company, right? So one of the issues that I face or my team face is we wouldn't know these customers actually has loan with other players out there, right? So do you think there's a possibility of having a centralized data for the players to know the customers, whether or not how's the paying behavior, whether default, all these things?
Do we have or should we have?
No, should we have, and if yes, is how?
So the credit bureau really performs a lot of that function today. So all lenders and anyone who holds information is required to report. And under the comprehensive credit reporting scheme, the credit bureaus hold that information today. So you can access that under a certain level of accreditation.
On the Flux app as well.
Yeah. But most of the players doesn't share it with credit bureau. That's a problem, right?
Could it be done better? That's, yes, very interesting opportunities. And I think CDR is really the enabler. That's a general purpose technology, which is going to really enable some new ways of thinking about that. Should it be centralized? I think the consumer always has to be in control of their data and their insights and should be empowered to use that accordingly.
Bit like locking away your Facebook account.
Thank you. Stuart, former lender. Question for Justin and maybe Tim. How much of a responsibility is on lenders for financial education, and how can lenders go better about doing that?
Yeah, thanks, Stu. I guess we kind of touched on this a bit earlier, but I think there's a full spectrum that, as you said, the lender is a responsible lender at the point in time in which the consumer applies for a loan. But there's a huge opportunity before the loan to get them in a position where they can, compare different options, or where they can understand what is in front of them, what the difference between an offset and a redraw is, and simple terminology that many people actually don't understand. And so, I mean, that's really an area that Flux is looking to fill with our Flux Enterprise product as well, which is a premium version of the Flux app. But, I think it's really important for lenders as well to take on some of that responsibility.
And also, it's about the transparency information. So, I mean, most lenders do this well, but in terms of the cost of that facility over a period of time, what that is, the simple things about giving that transparency to the consumer. There may be some population base that may come on to the platform, be whatever lender that is, but may not have a huge amount of financial literacy. So that would come certain surprises in certain fees, charges, etc. So I think if they have that transparency from the get-go, it's, back to the question on the responsibility. I think it's from the get-go in terms of the communication and the awareness that they're providing to the individual from the get-go.
Any more questions? All right.
Who wants coffee? Who wants tea? Who wants a lemon delicious cupcake? Because if you do, please thank our panel, Jackie, Justin, Tim and Richard, for a great session. Guys, you've earned half an hour off. We'll see you back here on the dot at 3:30. We're going to talk ESG. We're also going to talk fighting fraud. And then we're going to